kick it off, please be sure to click the record button.
Gonna grab some more coffee.
Okay, we are live. I'm sending you guys the link right now, March chat.
Here's the bell.
And could someone post the link in the YouTube channel, please? Or in the live stream channel in our Discord?
Yeah.
I posted it in the monthly giveaways.
Okay, cool.
Let's see the updated one actually.
Do you guys want the YouTube link? I'm just gonna put it in my chat. Oh, okay, you got it. Perfect. All right, you're good to go.
Good to go?
Yes, sir.
Okay, amazing. All right, so let's get started. Welcome everyone to our third Option Swing live stream now. My name is Jason. I'm the founder and CEO of Option Swing, and I'm excited to again kick off another session. It's been 2 years. It's been actually a little over 2 years since we first started our community. And every single year, we continue to make huge progress. Whether it's continuously growing our Discord community to over 2,200 members plus, or even the new products that we released last year, OS Algo, as well as OS Academy, which are things that we'll talk about in just a little bit today. At the end of the day, we're making a lot of progress, but this is all very impossible to do without the support of our communities. So with that, with kind of like every live stream, I like to first and foremost thank every single person, not only who's here on this live stream today, but also in the greater part of our community, who allows us to be able to do this and do what we love every day, and be able to continuously engage and share with you all. So thank you very, very much to you all for your support. Now, in terms of kind of agenda, we'll go ahead and talk a little bit about some community updates and talk a little bit about some of the progress in our community. And then we'll kind of talk a little bit about some fundamental analysis. We'll have some of our moderators share some of their key rules that they like to keep in mind as they're trading. And then lastly, we'll have a very engaging Q&A section where anyone who's watching from our YouTube live stream or even from our Discord server can ask questions. And then we'll just kind of open up the floor and kind of ask questions and answer questions throughout it. At the very end, we're also going to have a very special announcement. We're going to have a special winner, someone who is just kind of been engaging with us throughout today's live stream, be selected to get a very special prize from us. We're going to hook you guys up with something that's about $150 worth of value. And so again, just kind of stay tuned, and right at the end, we'll go ahead and announce who that winner is. But without further ado, Kabir, do you want to go ahead and change the screen here, and we'll start going through some of the community updates? Perfect. So starting with the kind of first update around OS Academy, Kabir, why don't you tell us a little bit about some of the exciting things that we've been working on and kind of the new trail that we've released?
Yeah, absolutely. Thanks, Jason. So this is a super exciting time. Simon and I created a new trail, which we worked super hard on. And it comes from a place where we're trying to start a new series. And it's going to be called Day Trading Basics, and we're going to have multiple sequels to it. So what we covered this time is a well-rounded, document full of content that any novice or even sort of experienced trader should know about or kind of revise upon. It covers stuff like exponential moving averages, simple moving averages, when to take profits, when to, put a stop loss, and what kind of different stop losses we can have. It has stuff about, portfolio management, risk management, and it goes in a very chronological order, where you start with the basics. You have your portfolio, then you start talking about some unusual volume, unusual activity, how to understand it and evaluate it. And then we have some technical heavy content, such as, building a watch list, why it's important, exponential moving averages, momentum, breakouts. And we'd love for it if you guys could take a look at it and be a part of that educational community that we built. And just on a side note, want to talk about the future of OSA. We're also going to be releasing some content on fundamental analysis, and we're going to do technical and fundamental analysis side by side and just keep releasing sequels to it and make it a very long and informative series. And I'm going to pass it on back to you, Jason, to give us some more updates about the community and some announcements. Thanks.
Awesome, Kabir. Really great work with all of that. Just to, again, kind of walk everyone through OS Academy and the portal that we've built. One of the biggest challenges that we've always been faced with is, the Discord server is amazing for people who have a pretty solid, grasp of trading and what I would consider maybe an intermediate level trader. But it can be very overwhelming for a beginner person who might not know all the terms or might not know all the different strategies of trading to kind of hop right in there and expect to really understand everything that's going on. So the purpose of Option Swing Academy, or OSA for short, is an entire online self-service platform that allows you to take your courses whenever you want at your pace. And then there's quizzes at the end of each one of these modules, and allows you to really kind of test your knowledge and make sure you're understanding everything. And the Discord server is a great supplement to that, where you can start asking even more questions around certain concepts that you're learning or something that might have not been so clear, and be able to really engage with other like-minded people, as well as even the moderators, and administrators of our community. So with that said, thank you so much again, Kabir, for kind of the updates on OSA. The next thing that I want to talk a little bit about is the OS Algo, and that's our second product that we've created. For those who may not be familiar with OS Algo, it is a tool that we created for more of our intermediate to maybe advanced traders, which allows us to kind of stream a lot of the market data that comes in every single day. But more importantly is because there's hundreds of millions of trades being placed every day, it's easier to have an algorithm looking at specific parameters, be able to start identifying more interesting trades that are being kind of placed throughout the day. And it's through those kind of interesting trades that we spot and find opportunities to trade against. Jose, do you want to talk a little bit about kind of OS Algo, kind of why you enjoy specifically using it? And then I'll be happy to share some of the, the statistics around how we did in March, unless you want to share that.
Oh yeah, 100%. I mean, as you guys know, it is a tool that we came up with. We've been tweaking it. We've been tracking the results since last year, since December, and it's been doing really well, to be honest. Every time we're learning more about it and stuff, and how to better use it or pair it with other indicators we have and whatnot.
Awesome, Jose. And in terms of some of the kind of statistics that we've been gathering, as Jose mentioned, for the month of March, we had 466 trades that were identified, of which 351 of those trades were at least 20% in profit. 229 trades were at least 50%. And then 103 of those trades ended up hitting at least 100% profit, if not higher. And so given a fixed kind of 20% in terms of, take profit kind of targets, and, a default kind of, minus 50% stop loss in place, and if you're averaging about $250 a position size, the P&L for March, based on those numbers, is just under 4,000. It was right at 3,900K. So that's just again, just another really cool metric. Again, it allows us to better kind of tweak our algorithm to make sure we're kind of finding more and more interesting trades. That way it can help spot, easier and easier opportunities to track. But again, just a very, very, exciting kind of product that we've been working on. And again, feel free to ask any questions if you guys have any regarding that solution. So with that said, the final thing that I want to kind of walk everyone through is around our monthly winners and our giveaways. So first and foremost, we have this new kind of structure of rewards that we're going to be giving out to our community just simply for being a member here, and just our way of saying thank you and giving back. So what we have is 2 awards, one for our kind of month most valuable trader. We call that the MVP award. And then the other is the Diamond member winner. And Dan, do you want to take us through kind of who our winners are and make those announcements?
Yeah, of course. So let's start off with the Diamond member. Our Diamond member winner this week or this month has been with us for over a year now. So I think he's well-deserved. And this person is Felix Gato, at Felix Gato from our Discord. I wish I had a first name and last name, but we go by Discord username. And for our MVPs, it's 2 of, I think, my current favorite traders. Number 1, I'm sure you guys are surprised, is the new kid on the block. Some people make fun of him. Some people praise him. You know, I think he's a great trader. He's a funny guy. He rolls with the ball. He knows how to take a joke, unlike some people that we saw yesterday. It's Anish Patel. You are our MVP trader this month. And number 2, a guy that's kind of digging himself out of a hole he's been in, but you know, he stuck to his plan and he stuck to his guts, and he is up fat this month. Number 2, our MVP winner is Texas, our good friend Brett. So congratulations, guys, and keep up the good work.
Perfect. Congratulations to you all. I'm actually right now texting inside of our Discord server channel. A quick congrats to the winners there. But again, thank you so much to you all for being members of our community. If you didn't win this month, don't worry. There's always next month and the month after that. And quite frankly, we do this every single month. So all you have to do is, again, just be a member of our community, engage with us, ask questions, show that you want to be there and that you want to learn. And then we have some really fun prizes that we like to give out to everyone, including a really nice kind of OS swag package that will be sent to you guys. So with that said, let's go ahead and kind of continue moving forward. Talking about the next section here is going to be Syme. Syme, he's been doing a lot of fundamental analysis for us lately. And if you guys are in our Discord server, you'll see that new channel that we recently created to specifically track some of more of these kind of macro level kind of headwinds that are going on. And that way, we can kind of pair that with some of the technical analysis that we like to do as well. But with that said, Syme, do you want to just walk us through a little bit about some of the fundamental analysis of kind of what you've been seeing in the markets for the month of March and, what your thoughts are around that?
Amazing. Thank you for that, Jason. And welcome everyone to another OS live stream. So it's been an interesting month, to say the least. No one would have anticipated after the last 2 years how 2020 went, 21, and how 22 would turn out. So with the pandemics, then the lockdowns, civil unrest coming up, insurrections, war, excess monetary and fiscal stimulus, and supply chain breakdowns, who would have seen that we'd end up with epic Main Street inflation, which, if you looked 7 months ago, there was a question, someone asking Elizabeth Warren if she's worried about inflation. And she's like, what is inflation? Why would we ever worry about that? But here we are a couple months later where things have gotten so out of hand that I've seen videos where people are filling up their gas on the West Coast and the price of gas is going up as they're filling their tanks. And that's not where the craziness stops. The craziness has gone as far as people are now siphoning gas out of people's cars. So gas is being theft, and it's just mind-blowing to see that where we were a year ago, where people were like, how are we ever going to get demand back up? How are we ever going to go back to those pre-COVID levels? And today, supply is just not there to match that. So with that, there's been a lot of inefficiencies in the market, as we've seen. Heavily this year, the focus has been on the energy sector. And as we all have learned, this is predominantly because of Russia, its implication of its 3 million barrels per day that it provides to the market. So there's been a lot of FUD around this, Bloomberg coming out with an article saying how, with the Russia oil not being able to reach market, we might see oil prices go up to as high as $200, $300, some ridiculous numbers. But if we really break it down and we see the latest OPEC reports and the rigs reports as well, what you get to see is those 3 million barrels per day that are being pumped out by Russia are still reaching the markets, whether it's India or China buying them at discounted prices and then reselling them to the broader market. I'm not too aware of right now. But we will figure out where that oil is going because someone is buying it. And with Austria and Germany and even Turkey saying that they won't sanction Russian oil or gas because they need it and they're so heavily dependent on it. And just for you guys to understand by context, 1/3 of Germany's gas and energy needs are supplied by Russia right now. So as you may have seen, France's Emmanuel Macron has been mediating the entire situation alongside Israel to help remedy the situation in Ukraine. But Germany has been staying silent. Now, we're not going to go into politics of that, but it's just important to see on a high level what that means for the global macro environment. With that, as you can imagine, Brent prices are up already 48% this year, WTI is 45%, natural gas is 17%. And somewhere in some corner of the world, Peter Schiff is probably scratching his head and wondering why is gold only up 6.7% when this is probably the year where gold is supposed to go up its highest. And that, with all that, what's important to note as well is for the first 3 months of this year, retail investors have been net buyers of the market, where the market has come down significantly, right? Since November, we topped out on the S&P 500 on the Nasdaq, and recently, briefly, we touched bear territory on the Nasdaq as well, just before things started bouncing back. Now, a lot of people are debating if this is a bear market bounce, if this was the end of the correction as we saw it. And there's quite a few evidence pieces that I'm looking at. For example, there are companies on the tech side of things, whether it's Cloudflare, Netflix, they're down almost 30, 40, almost as high as 80%, some of them. So that is definitely a tech valuation crunch. And we're seeing that play out also in the VC space right now, where Instacart, which is a private company about to go public, had its valuation slashed in half from 48 billion to 24 billion. So the implications of the rising rates in the market, the current inflation, is definitely sending some tremors around the globe. What's also important to notice for retail traders, investors as a whole, when coming up with your game plans and looking at the macro environment, is the bond market. Now, the bond market is 100 times bigger than the stock market, if not greater. And it really dictates the terms and conditions of how capital markets will operate. And a lot of people, because they do come into this trading background just from the sense of, oh, it's a Robinhood app, how hard can it be? My friends are doing it. And fortunately, with the help of the mods at OS and all the tools that you have, it has become a facilitator process. But sometimes it's important to zoom out and look at the bigger picture. So the bond market has been telling us, with the inversion of the 10-year and the 2-year curve, that an impending recession is on its way. Historically, 100% of the times that this has happened, it has led to a recession within 48 months, so 24 months, 2-year time period. Whether this time will be different, we'll be sure to figure it out with you and navigate those waters. But with that being said, a couple other last things that I really want to touch on is this last week, it showed that there were retail investors that were now turning bullish. There were, institutional investors that were now turning bearish. Now, stock market has become a sign of inflation hedge simply because where else are you going to park your money with inflation at almost 7.28%? Where else are you going to go and put your money in? So with the cost of borrowing going up, as the Fed came out and just did their first 25 basis hike, the market did get shook up last week because Powell and the other FOMC members started talking about potentially doing more aggressive rate hikes, so 50 basis points, maybe twice this year as well. And for that reason, what I think is going to be a consequence of that is cash-rich companies such as Apple, Microsoft, and Alphabet will outperform as the yield on investment will rise. And with such, I'm expecting a major boost in the bottom line for these companies as well. The bond market has been indicating to us that there is an impeding sign of recession, alongside there is still risk in the market, with almost $5 trillion being wiped out in the last couple of weeks. Aside from that, energy sector is where my eyes are right now. Still, tech makes up 27% of the S&P 500 today by a percentage market cap weight, but energy is only 3.7%. So just historically, it's still low, but I feel like it has a long way to go in catching up, because a bunch of these oil and gas companies, instead of trying to drill more, are now focusing on building their balance sheets, getting their dividends ready for years to come, and being able to pay those out. With that being said, over the coming month of April, I do expect to see some more stability come back into the market. A bounce back from here would be would be nice to see in some of our favorite companies, especially those that have cash flowing models. And with that, I'll always be keeping you guys updated in the fundamental analysis channel as well in the OS. So thank you, Jason, for that, and I'll pass it on back to you.
Cool, thanks, Simon. Super appreciate you sharing kind of your thoughts there. I think one of the most valuable things that any person who's kind of learning how to trade can do is listen and kind of learn from other people and the way they think. And that way they can kind of better understand concepts and, and learn from there. And so really, really great job kind of breaking a lot of that down. Lately, we have been kind of letting people know more and more about kind of the fundamental analysis kind of work that we're doing. And so again, if you guys have any interest towards, looking at more kind of macro trends and looking at more wider things in terms of what's going on with the world, that's something that we also do a lot of inside of our Discord beyond just, actively trading day to day. So again, thank you, Simon, for all of that. And so moving along, I want to make another reminder here that at the end of this live stream, we're going to be picking one person who's been kind of engaging with us, whether it's on Discord or whether it's inside of our YouTube chat. So again, just make sure to, ask questions, make sure to engage. But again, we'll be picking one special winner at the very end to win a great prize. But with that said, let's go ahead and move it to our next section, which is going to be kind of talking a little bit about some of the key rules that we follow as traders. And I'm going to have Jose actually just kind of kick us off first with that. Jose, what do you typically do, or what do you try to remind yourself to do at least when you're trading each day to make sure that you can stay as profitable as possible?
Yeah. So let me share my screen for a second. Okay. So basically I wanted to go over 3 rules today. Basically, I know most of the people in our channel are obviously focused on day trading and stuff, and most of the questions that I get, are from people that are basically day trading. They don't know when to enter, exit, and stuff, or what to really look at. So I wanted to mention three things. I have 3 rules for day trading if you're going to be day trading weeklies. The first one is all your stops, they have to be at 50% minimum. As we see, especially today, we had news hit the market in the middle of the day. Everything was looking good. We had a retracement. If you had a tight stop, you were basically taking the loss in a second. So that's the first rule that I wanted to point over. The second rule, honestly, is try to use the EMAs. Use the I personally like the 9 EMA and the 21 EMA on the 5-minute or 15-minute time frame. They can give you exits. If you see a crossover of the 9 EMA over the 21 EMA, you can get an entry on a trade. You can or you can get an exit the same way. And the third thing that I wanted to mention is basically unusual options activity. It is your best friend, and you guys saw it today. We had the activity betting on snow going up, and what did it do? It was going up. The news hit the market. It retraced back a little bit, but it ended up going up. At the end of the day, these people, they probably have analysts, they have insider information. All of them trade on insider information for sure, and it is good to follow. If we pair unusual options activity with our indicators, our success rate is indeed going to be high. That if we only do technical analysis, or that if we only analyze the premiums.
Yeah, I couldn't agree more, Jose. I think especially with kind of like the first key point that you were talking about with like the, minus 50% stop losses. First and foremost, that's a lot of that is about discipline. It's about making sure that, you're not holding on to bags, and if you really understand that it's kind of down that far, it really should kind of give you an indication that maybe you should kind of relook at that and decide whether or not you should cut that loss there. But another thing that you also kind of taught me, Jose, was that A lot of it, not only when you're trading, it's about having a hypothesis, and whenever that hypothesis changes, you have to also change your trade. So if you're in a trade because you feel that, these certain factors are happening and that's why you think it's going to, go up or down, but then your hypothesis changes because suddenly some new news comes out and now it's no longer the case. Does that mean that you should keep holding on to it out of stubbornness that you think it's going to still keep going? Or do you cut your loss and you find your next kind of opportunity because your hypothesis is no longer the same anymore? So again, kind of, hitting on that part, that minus 50% marker is typically a good point to just kind of remind yourself, okay, we're now at this kind of point here. Has anything changed with my hypothesis? If nothing has changed and it's just a matter of decay, then maybe I do hold it, a little bit longer. But if I do know that, the parameters have changed, then maybe I do cut it. So that's a really good one. Kind of for the wider group, Dan, Will, Warwick, really any of you guys, what do you guys think about, some of these key points? Do you also agree? And do you guys maybe have some of your own to share? And Dan, do you maybe want to go first?
Yeah, most definitely. I think I get tagged the most in the chat asking if I'm still holding a play because for the most part, I only swing trade. I don't do day trades because I have another job as well. So I'm not sitting on the computer all day just to watch the charts. And that helps a lot too. It helps a lot not watching the 2-minute or the 5-minute time frame because you get faked out a lot. I see people in chat a lot just yelling at names or saying something's dumping or ripping, and it's up like a cent or two. So I think just kind of remind yourself of why you entered the position, what was your DD on it, and like Jose said, set some white stops. Like if you have a target, that's what you should be aiming for. And if you keep seeing flow on that certain name that you're playing, and it's going the opposite way, like ask yourself, are these people like, why is it still buying the dip? So maybe it's a good time to average down on that position. But for the most part, I think larger time frames, look at flow, even analyze the flow. If there's more flow coming in during dips or rips, depends if you're shorting or longing. Like I said, consider averaging down that position, and just don't psych yourself out. Don't use small time frames because you more than half the time you end up on the losing side of that because you're gonna psych yourself out.
Couldn't agree more. And what about you, Will? Thoughts there?
Hey guys, yeah, I took some notes for this subject. So for me, the biggest thing is just having a plan and sticking to it with any sort of trade, whether it's a swing or a day trade. Because like Dan was saying, I do tend to psych myself out with the charts. Like he can attest to that. So having like a plan, like entry, exit, and validation before you get into a trade really allows conviction. And when you have conviction, you can size appropriately, and that's where you can start making some actual like life-changing money. And then another thing is, we like taking lottos or gambles or whatever, like kind of far out the money, close expiry positions that it's like, if they hit, it's like a 10X, but they don't always hit. So those are always fun to do, but you got to do that with the profits from your core position rather than with your like initial investments, because that can really like slide down your portfolio value like really quickly. It's always fun to have like a $1,000 account and then you like 20x it in a week because of all your lottos, but it works until it doesn't, right? So it's like gamble with your profits, not with your initial. And then another thing is find out what analysis style and how you interpret the market, what works for you, right? Because you've got price action and you've got, intuition of like macro trends and rotations, like Dan does. You can't kind of flip-flop back and forth, right? Like you got to pick something and stick with it, figure out a system that works and a way to kind of break down the market. And don't doubt your whatever your conclusion is about directions and trade plans, right? Like you have to, that all goes back to the first point. You have to have conviction because you have to know that your system works. And so in order to get to a point like that, you need to figure out what that system is.
That's a great point. Yeah, indeed.
Really good points there. And Warwick, I know you've had a few things that you probably want to add in.
I like Dan's point about like not looking at the screen. I tell people that all the time. It sounds so counterintuitive at first because people are like, "What are you talking about? Like my money's on the line, whatever." But I mean, usually like a week is a long time. It might not feel like it, but a week is like a really long time for your trade to play out or whatever. So yeah, I think if your size correct, and then sometimes you just gotta walk away because you'll be your own worst enemy.
Yeah.
I mean, you know what
I
happened
can
with
attest to
Warwick
that.
in the server. There's an inside joke about Warwick having just like the biggest winners, but he takes profit at 20%, and they go up to 2,000%. Like no joke. It was an NET play when he literally bottom ticked it, and then NET moved 100%. I think it was in a month, and I kept it.
No, it wasn't that. Yeah. It was at net was at 112, I think, and I bought 117s for the following week. I don't even remember why I bought them. By that following week, net was at 172 or something like that. And I think I sold the next day for like 80%.
Or Neo's asking, how do you cope with a situation like that where you get out of a position and then the next thing you know it's 200%?
Dan usually sends me screenshots of his wins because he holds them.
Well, yeah, but he's asking how do you deal with that? Like, how does it not affect your mental?
I mean, it's happened so many times. It's like I know there's going to be another one. You know, so
yeah, that is true.
There's
another
no
one that you can sell at 20%.
There's no point.
I mean, like a way to fix that. I think a way to fix that is buying multiple contracts. I know a lot of people just buy single contracts and they exit their position right away, right? So if you buy multiple contracts, they can do what I do a lot: just trim on the way up and kind of roll your position into further strike. So I think that's the way I kind of really grew my account and compounded. Just kept rolling the ball, kept rolling the strikes out, and just bought multiple contracts and just trimmed on the way up.
Just to kind of like expand on that. Oh yeah, go ahead, Warren.
It definitely helps that Dan lets me drink for free at his bar. So
yeah, saving him some money so he can spend it on lottos.
Kind of going back to like Dan's kind of point there, one of the things that we always kind of teach about in terms of almost like disciplined trading is scaling in and out of positions for that exact reason, that if you're only holding on to a single contract, it really is all or nothing. You either have to decide whether you want to hold it or you want to sell it. But if you're hypothetically holding on to, 2 or 3 contracts, well, now you have the option to sell one, but hold on to one. So that way you don't have that FOMO of, oh man, maybe if I hold it a little bit longer, maybe it does run up. And sometimes it does happen in a positive way. And you're really thankful that you did hold on to, some of those shares. But in other kind of situations, sometimes it doesn't go that direction. And more often than not, you actually end up losing, what your potential profit could have been by holding too long. But even then, you can still kind of scale out and still kind of make some money and lock it in, versus all or nothing plays where you're either buying all in now or selling all of them all at one time, and then really you're just kind of at the mercy of timing, which is really, really difficult. So really, really good kind of responses there. And I think this is a perfect segue into almost kind of the Q&A session that we want to kind of hold with the greater community. Just as a quick reminder, we have a lot of viewers tuning in from YouTube, as well as also our Discord server. And so inside of the different chats there, feel free to ask questions and post them in there, and we'll go ahead and kind of work through them and start answering them as need be. The first one that I'll ask kind of to the group is a question from Airbrush Wiz. And he was asking earlier about, EMAs. He was asking, why do some people use the 8 EMA? But I think maybe even broadening that question a little bit further. First and foremost, does anyone want to talk a little bit about what an EMA is or EMA is, for those who may not be familiar with that acronym? And then from there, why do we typically use a longer or shorter time frame when looking at that?
I can answer some of that. So EMA, I don't know what that actual acronym is, but it's like a moving average with a higher weighting to like the most recent price action. But yeah, the 8 EMA, I got it from this guy on YouTube. His name is Rick. He has like his own YouTube channel, pretty good stuff. But basically, like a lot of algos and stuff will use those short, like 8, 9, 10 EMAs to keep price going. And I've found it a pretty good way to, basically make decisions for me. So I don't kind of, I guess, make the wrong decision. So yeah, like if price is going up, it'll stay on the 2-minute or the 5-minute or 15 or whatever, but it'll stay above that line the whole time. So that's why I like using it.
And anyone else have any thoughts around EMAs and kind of why they use their numbers and kind of time frames?
I use the VWAP or the Anchor VWAP. I think Will and I use that just because I trade on
I just use regular though.
I use daily charts and weekly charts. The EMA is more for like day trading. And I know the rule that Jose has for that is it's stay in your trade until the price action breaks under the EMA, and that's when you exit. So he always says there's no reason to exit this trade unless this level breaks, and which is a big way to kind of hold your conviction. Kind of same thing with stop losses. Like sometimes stop losses just don't work. What you have to use is kind of a physical stop. Stop yourself at a certain price level where your setup is kind of invalidated. That's not really an indicator, but that's what I use. And yeah, Will, what do you think? I know you're big on that too, on invalidation points on charts.
Yeah, so I don't use any moving averages for that because they're dynamic, you know. So it's like if your invalidation is like close under X level or like X moving average, you know, a week later that moving average is going to have curled up or curled down or something. You know, it changes the level. Where some people do trade like that, but I don't really find that to work for me. My invalidation points are more like daily levels or like 4-hour levels, you know. You know, but the thing is also that's funny with like price action or moving averages is that a lot of times people who are looking at the same setup with two different ways of like analyzing it come to the same conclusion, whether they're using moving averages or VWAP or, you know, just straight candles. Like the trade plans tend to be pretty similar. Like they all kind of, you know what I mean? They all kind of present the same.
Oh yeah.
Yes,
and that's why it's like.
And I think that at the end of the day, like you're saying, we cannot rely just on one indicator. And I have a perfect example right here. So let me show it to you guys. So for the snow chart, right? This was today. Okay, so it broke the pre-market high, ended up going, you know, it was showing relative strength to the market, you know. Then we had a unusual activity when it was around here on the EMA, right? We had bad news up here. We retraced, but when we retraced, we didn't lose the pre-market high, you know. Obviously on the EMAs, they would tell you exit, you know, but it never lost the pre-market high. So at the end of the day, obviously you gotta be looking at all the picture, not just one indicator to signal your entry or exit. As we saw later, you know, we had a crossover of the 9 EMA over the 21 EMA, and it just rode it all the way up, you know, even bouncing on the 21 EMA, and even went higher, you know. So yeah, don't rely on a single indicator, you know. You gotta use a combination of many things to make decisions, for sure.
100%. And that's where technical analysis becomes really important in understanding these different indicators that can be used. Because like everyone is kind of saying here, it doesn't ever work the way where it's like a single indicator that you trade off of and you expect to be successful against that. It's really more so these indicators are telling you a multitude of different, you know, pieces of information. And from there, you have to use your best kind of guess to decide, you know, what is the price going to do and how is it going to react. But when you understand these indicators well, when you can kind of match up some of these indicators together, and then you're seeing multiple indicators kind of flashing the same, you know, kind of indication, like maybe something is very bought, and there's a potential opportunity where someone's going to start selling it very soon, and that could start triggering a price decrease. Well, you know, 3 different indicators, you know, are going to be able to kind of show you that this is something that's overbought right now. Even though the price continues to skyrocket more and more. So again, it's just little things like that where you have to A, understand how to use the data, but then B, be actively looking and reviewing that data to be able to spot opportunities. And again, that's just the best way to kind of be your own self-sufficient trader. The next question that I want to kind of pose to the group, Stephanie Cortez was asking this in the YouTube chat. She was asking about trading on mobile devices, which is, I know, something that almost all, if not all of us do today. And kind of what are your general thoughts in terms of first and foremost, maybe let's start with trading applications. What is your favorite mobile trading application and why? And let me ask that one to Dan first.
TradingView, 100%. I mean, I open my positions on my desktop, but then I keep up with them on TOS, obviously, when I'm at work. But TradingView, I think it's the best application just because they're so versatile with their charts. There's so many things you can do with them, and screenshots or type and just write notes. And their live data is amazing. You pay a little fee and just, it's really good. And then the quality on the mobile device is really good as well on TradingView. You could you draw your indicators, draw your lines. It's a little hard on smaller phones, but I know Jose has a huge phone, so he uses his stylus on that one, so he has some really nice strips on that. It's kind of hard on my phone with my big old fingers, but yeah, I would say TradingView definitely.
Cool. What about you, Ward?
I mean, I wish I could say Robinhood just because like I like that it feels like an arcade.
I do too, honestly.
But ever since they changed the colors, it's just not the same. So I can't go for that.
I couldn't agree more.
Yeah. Like I try and spend as little time as possible in Thinkorswim. Like I literally only open it to buy a position or close it. And then outside of that, I try not to look at it at all. So yeah, TradingView has my vote.
It's so ugly, huh? TOS. It's so old school.
It kind of grows on you. A little bit like retro.
I like TOS. Honestly, I love the interface.
I hated it at first.
It's not cool. Beautiful, but it's just you look at it and you're like, yeah, this thing's reliable. This thing's not gonna break.
It's super functional.
Exactly.
Yeah, it's like
a charting on TOS is impossible though.
Prius with nice rims.
Yeah. No, I don't chart on TOS. I agree with for charting. I use TradingView too. For trading, I use TOS. That's it, and Binance for crypto.
Exactly, that's a good call out there. Like TradingView being a great mobile app as well to supplement it with something like Thinkorswim. That way, Thinkorswim, it's super reliable. You can place your trades. You can still have your alerts set. You can do all that great stuff. But really, TradingView can help you, with the charting, with technical analysis. I personally like Robinhood a lot. I just like the free, no commission on each trade. I like how simple the interface is. But to Warwick's point, ever since they took on the new kind of theme and the color and the look and feel, it just, I don't know, doesn't hit the same for me. So with that said, let's kind of keep moving along to another question that we have here. This one's from CJ over in our Discord server. And this one's really more for kind of our Discord members, people who are in there. He's asking, with so much kind of flow data coming in, with so many different people's opinions being expressed across multiple channels, what is kind of our recommendation in terms of how to best digest kind of all of the things that are going inside of Discord and to kind of decide, what to really act upon? I guess maybe starting with Jose this time, what would you recommend to folks using our Discord server today in terms of how to maybe, leverage all of the amount of things that are going on at any given point correctly?
Yeah. So I obviously understand that there's a lot of information, but at the end, that's the point of having a lot of information to make the best decision with this information. And basically, if you want a snapshot of everything that's happening in the group, you gotta go to a trading stream. You are gonna have the pre-market updates. You're gonna have the fundamental analysis from Sign. You're gonna have charts. You're gonna have the trade ideas that we post up. You are gonna have the watch list that we do every day. So basically, a trading stream, yeah. Like if you wanna obviously engage in discussions and stuff, it's gonna be taking like a little bit more time, and you're gonna see different opinions from everyone, but if you want to hear what we think, what Option Swing is thinking, you gotta go to a trading stream.
Awesome, Jose. And Dan, what about you? I know you're always kind of in there posting out different plays that you're going through. How do you kind of recommend folks, better digest some of this information that's kind of being put out there?
I would say you could kind of just ask yourself, what kind of trader do you want to be? Do you have the time to sit on your computer all day, or do you want to open a trade that's 3 months long and just go to work? That's why we have the high risk trades. We have the equity swings. We have OS Algo for day trading. We have the flow channels if you want to kind of analyze, pour out the money, options with time, like I said, for swinging. We have a little bit of everything. Just it's kind of all up to you and what do you have time for.
Yeah, and Will and Work, do you guys have anything else you want to add to that?
You guys can hang out with me in the educational chat.
That's actually that's a really good point, Work, and I think that's something that not a lot of people understand we do, but it's absolutely there every single day. I'm not sure if you guys all noticed, but Work in the morning always very quietly kind of waves his hand and says, "Good morning, everyone," and office hours are open. And I know some of you guys take advantage of that, but just to make sure everyone understands, that channel exists and what it's used for. Essentially, in our Discord server, we have a channel called Educational Chat, in which Warwick, sits in there for however long. Really just depends on how many questions that people have. But he does this on a daily basis, where he lets anyone and everyone ask, any question, really. That they want to have a second opinion on, and we're in there to help. And it's not just Warwick answering, but it's all of us in there being able to kind of respond and see these questions and be able to engage with you all. So don't worry about always waiting for these Q&A sessions on these live streams. If you guys do have questions, you can always ask that inside of the Discord server. But yeah, just moving right along then, there was another question that I had seen from Stephanie again. She was asking back in the YouTube chat, how much money do you suggest putting in per trade? And this is something where I'll kind of start off and answer the first part of that question, and then I'll let anyone else who wants to kind of add in answer a few things there. But first and foremost, trading as a whole has to be done with disposable income. One of the most difficult things about trading is that it can become very emotional when you're trading, because it is your money. And so when you're doing well, it feels really great. But when you're doing poorly and you're losing money, it feels like one of the worst things in the world. And especially if you're compounding loss over loss over loss, it only makes it that much harder, and so forth. And so one of the most important things is, in terms of trading and trade sizes, you always have to first and foremost use disposable income that you're okay with losing money on, things that aren't your rent check or your credit card bill or your food, or anything like that. Those are obviously required expenses that you really need to budget for. So anything extra on top of that you want to invest into, that's the funds that you should be using. But when you look at the total amount of funds that you have available to you to trade with, you should never be looking at it in terms of necessarily a dollar amount, where it's, because Jose trades $200 a trade, I should also trade $200 a trade, because Jose's account size could be vastly different in terms of how much he has in there versus how much I have in there. And so you can't necessarily look at it in terms of dollar amounts. You have to look at it in percentage amounts. You have to think about, if my entire trading account is 100%, of that 100%, I should really only be putting in maybe 10%, into any given play. And then if that, maybe up to 20%, 25% if I'm feeling really bullish, on a position, but never more than that, because that's when you get into a lot of trouble, where if the trade goes south, you start seeing people's trading account balances where it's literally peaks and valleys, right? You see people's things going up and down like crazy. It's because they're putting way too much money into each one of these positions that their entire account balance is literally fluctuating like crazy from it. Whereas if you see someone who's doing proper position sizing, you'll see that their account typically has these very smaller movements of, maybe change over time versus these large kind of peaks and valleys. But that's kind of how I look at it. Does anyone else want to kind of add in anything there in terms of position sizing and how much to put into each position?
I couldn't put it any better than you just did. But something that I do want to speak on is something that I see a lot in the server, where people, they start with 1K or maybe 2, and they build up their portfolio to just a massive amount, like 25 or 50K in the span of 2 weeks. And then you see them a week later, and they're back to zero. And I think, they're doing great with lottos and they hit it, but they just stay too aggressive all the way to the top. And then they think that, the luck's not going to run out. And a week later, they're from 40, 50K back to starting point. I think, you got to know when you have built your account already, because that's the power of options. You could build a small amount to a really big amount, but you could also blow a big amount. Once you build your account, then that's when you got to, take it easier and then go back to what Jason was talking about and kind of think, all right, what percentage of my account am I willing to lose if I want to pay myself every week off what I've made? So definitely kind of get more conservative as soon as you start building your account. I keep my position sizing all the same now. It's all 5K positions based on my portfolio, of course.
Exactly. Any other thoughts around that?
I mean, it's like, what are you willing to risk? I think that's kind of what you have to establish before you take any trades. So like, if you're willing to risk $100 to make 200, great, then just do $100. Dan's willing to risk 5K to make 10 or 15 or whatever. So, he'll keep doing 5K. So I think kind of start there and then figure it out.
Exactly. And also, even if you have the money to trade, even let's say, you have a great day job and it gives you a lot of disposable income, but you're still new to trading, it does not mean that you should necessarily be trading with all that money. I think that's kind of a given, but you'll be surprised with how many stories you'll hear of people saying that they've lost $10,000, $15,000, $20,000 of trading because they're not a very experienced trader. And people with that kind of money shouldn't be trading that aggressively if they're not confident in kind of what they're doing. So, again, really look at your account more so in the sense of like percentages. Am I risking 5% of my account, 10%, 25%, stuff like that, but never exceed more than 50% of your account on, any single trade, unless you really are just, ready to start gambling at that point. But, with that said, let's kind of move it on to another question that we had. This one's from Oscar over in the YouTube chat. Oscar is asking, when you buy an out the money call, what is a good stop loss percentage to set for yourself? And that way, you can, again, kind of manage your position the best. And he gives kind of an example of something that he did with Coinbase and buying an out the money call there. But with the market change and everything that happened, his trade ended up, being a loss. So I think this kind of goes back to maybe Jose, I'll have you kind of answer this one first, but this kind of goes back to your kind of minus 50% stop loss kind of rule of thumb that you like to use. But do you want to talk about that again one more time and just share a little bit about why it's important to also use stop losses?
Yeah, basically for weeklies, from what I've seen, not only on the algo, but from what I've read and stuff, obviously it is really hard to come back from a 50% loss. You need a 100% return. And honestly, if you're gonna jump in a weekly and stuff, you should be knowing that that you could be losing 50% of it. You just be prepared for that. Honestly, that's the rule of thumb, but obviously you gotta look at your charts, look at your levels, and decide where the trade is invalidated.
On that coin one, it would have been really helpful for like us if we had more details about the trade. Like if it was a 0 day, if you came back later, like it's gonna be worth less. Like if it was for this week expiration, you swung it to today, then coin opened up green and then ran another 5%. So it's like, on that specific question, it's kind of hard to answer that more specifics.
Exactly. Okay. No, I think those are really good pieces of feedback there. But, again, it's important to have them to begin with. I think a lot of people trade without even thinking about stop losses, and so forth. So even just setting kind of a mental stop loss of call it, down 50%, and then again, kind of assessing the trade from there and then kind of making those decisions. So, good feedback there. This next question comes from Mr. Paperhands, a longtime Discord member of ours. And he was actually kind of talking on the same kind of thread about small accounts, and trading with them. What are some of the more like foundational advice that we have for those who are trying to build small accounts? And again, I'll kind of take a stab at that first and kind of answer it a little bit and then have others kind of, provide some feedback. But one of the, most kind of challenging things about trading a small account is first and foremost, your buying power is extremely limited because most options contracts are going to cost you anywhere from tens of dollars to hundreds of dollars, if not even thousands of dollars. And so when you're trading a small account, for you, a $200, $300 contract could be 30% of your entire account, whereas it could be 10% or 5% of someone else's account. So you have to be really, really careful about how you trade small accounts in the beginning. It's better to stick with companies and trades that you are more familiar with, right? You shouldn't just trade a company because, just because the share price is only a few bucks, making the contracts also equally very cheap, that's just the companies that I should stick to. Because more often than not, those end up being very, inconsistent or hard companies to trade versus some of those more, big time flyers like AMD or, NVIDIA or, Apple or any of these other kind of companies. And so you do want to kind of, with a smaller account, you have to be a little bit more looser with kind of your, how much you're putting into each trade, just because of, how the values work out. But, more than anything, it has to be about small wins. I think a lot of people get too overambitious. Maybe it's because of the screenshots that they see. Maybe it's because of like Wall Street bets that they follow, but they see these accounts going from, $1,000 up to $5,000 up to $25,000. And as much as, yes, it does absolutely happen. And that's why options trading is, very exciting for a lot of people. The number of times that actually happens is, few and far between. And more often than not, people end up losing a lot of money because they're trying to chase more or less a pipe dream, of trying to make that kind of money that fast. So, when you're trading a small account, again, another kind of foundational advice there is to, rack up the small wins, but get that consistency under your belt, because a confident trader will be a more consistent trader than a shaky hand, not so confident, I'm not really quite sure, and then trying to place these trades and always second guessing, always, deciding to cut your losses too early, and then always taking, L's over and over again for it. So that's kind of what I will, say on that part. But anyone else, have some thoughts around, better ways to kind of manage and build small accounts?
Yeah, I mean, I can add that. There's a right time and a wrong time to kind of start a small account or challenge account. I mean, if you start your challenge account when there's just chop, you're probably going to get wiped out pretty fast. The best time to kind of start a challenge account is when there's momentum in a certain sector or just momentum in the market overall. That way you can just compound and just keep the ball rolling, like I said. And sometimes, a lotto, that's how I built my account, just hitting lotto sometimes. But like I said, it has to be momentum. Like if you caught the bottom on tech this month, then your account is probably pretty healthy right now. But it's just really hard to tell. But I think the most important part is just kind of realizing when's the right time for it. If you see momentum in a certain sector like energy, how we played it since December, then go ahead, play that and just keep it rolling. But if the mods say and like there's nobody playing any swings right now, is because the market's choppy and your premiums are going to get chopped up. So definitely just timing is very important for small accounts.
Exactly. Cool. I know we're kind of coming up to the top of the hour, so I'm going to have maybe one more question kind of thrown out to the group. And then again, we have a Discord server that we're constantly engaging in, that we're kind of sourcing a lot of these questions from. So even if you guys don't get your question answered today, just ask those questions inside of the Discord channel, and we'll be able to answer them directly in there. But for the last question, this one is going to come from Silent Storm. Again, from our Discord server. Silent Storm is asking, what timeframes are recommended for swing traders? And so, again, I'll take a quick stab at that one because I typically only swing trade. And so, and then we can have some others kind of, join in as well. But for me personally, my favorite kind of charting timeframes is typically the 1 hour, the 4 hour, and the 1 day charts. The reason why is because first and foremost, as a swing trader, you need to look at longer time frames so that you can start really seeing how the stock, is reacting. And when you're looking at a shorter time frame, call it the 1 minute to 5 minute chart, you're going to see the price action all over the place. You're going to see big long green candlesticks and big long red candlesticks and short ones and wide ones and fat ones and all sorts of stuff, right? It's going to be all over because it's just on a minute to minute basis. It's very volatile. It's always constantly moving. But when you start slowing down that time frame to something like a 1 hour, a 4 hour, a 1 day frame, you really have to let those candlesticks develop before it makes that marker of this being a long green stick or a long red stick or a short one, and so forth, because each one of those obviously means something. So when I look at time frames for swing trading, I like to look at the longer frames because it allows me to see what's developing on a longer period. The longer time period you can look across, something like 180 days, even up to a 1 year chart, that's even better because then you can really start spotting things like your support and resistance levels and be able to start kind of mapping those out. But with that said, what else do you guys look at, in terms of, swing trading kind of tips and timeframes?
I use the daily, definitely use the daily, and I'm knowing the server for kind of buying the highs. And the reason I do that is because I'm trying to buy a breakout. I'm not really good at bottom taking in any names, but I chart the daily and weekly and look at where it's had resistance maybe 3 or 2 times before, weeks or months before, and just kind of try to catch that breakout. And I've been pretty good with that so far. So that's what I do. So weekly, daily. I rarely use the hourly, but if I'm staring at it all day, I'm using the 15-minute.
Yeah, for me, weekly, daily, 4 hour for swing trading. Like the lowest, and I'm still working on this myself too, but like if I'm in a swing trade that's like a month out, the lowest time frame I want to go to is like the 1 hour, right? Because if you got a month of expiration, why are you looking at 15-minute candles? They're not going to tell you anything unless you're like just nuking through like a weekly support or something. There's you're gonna psych yourself out of a position. If you got time, look at candles that give you time, like information on a longer period of time. So the lowest for like a long swing would be like the hourly, but you should probably stick with even like the 4 hour.
Exactly. Cool, guys. Any other kind of final closing thoughts here? Nope. Okay, cool. So I think that brings us right to the top of it. Oh yeah, go ahead, Will.
I was gonna say we nailed the crypto bottom last week or last stream.
Yeah.
We're up 10 grand since we were talking about it. 40 to almost 50K.
Phenomenal. That's actually one of those topics that we should probably do in another live stream, is talk a little bit more about that whole kind of Web3 space, things that are going on with the crypto, with the NFTs. Because I know there's a good amount of our community that are also kind of very interested in that. And if you guys do have, some similar interest about having some more conversations around kind of those whole crypto NFT conversations and kind of even picking our brain about it, be sure to leave kind of a comment or leave some kind of message inside of our Discord server. But we'll kind of collect that feedback and we'll keep applying it into our next live stream to keep making these better and better.
I'm happy to talk about all that stuff. So please let us know.
Cool. So without further ado, I'm going to announce our final winner. So Stephanie Cortez, who was in our YouTube YouTube chat and live stream. Thank you so much, Stephanie, for not only joining but engaging with us today. And you're actually our special winner. And so I messaged you inside of the YouTube chat, but if you can just DM us on our Instagram account, it's @optionsswing. We can go ahead and send you kind of your special gift. And so with that, thank you everyone for joining today. We super appreciate everyone's time and support. And again, all of this in terms of what we do is not possible without you guys. So again, thank you so much for joining, and we look forward to see you guys in our next session. See you guys later.
Bye, everyone.